it's time to do afternoon business right here on Business Incorporated, and we have 25 minutes to do that. Here's what we have prepared for you. In Uganda, they are counting their gains. There's a surge in exports. Nigeria's local bourse exploded last week. Is that still on this week? And in Algeria, new bids for oil and gas. Great to have you on the program. I'm Ini John Mekwa, and this is Business Incorporated. We start from the global oil space, where prices rose as the U.S. and Iran, they're teetering on the brink of renewed war after attacks on commercial ships in strategically vital Strait of Hormuz. And the U.S. Navy on Sunday fired on an Iranian container ship in the Gulf of Oman, and the Marines later took custody of that ship. President Donald Trump disclosed this, and the ship had tried to get past the U.S. naval blockade of Iran's ports. Trump said in a Truth Social post. And so we see more than 4.5% increase in the price of Brent within yesterday and today at $96.52 a barrel. So we have seen a bit of calm, after that agreement and the conversation that there's going to be a renewed peace talks between U.S. and Iran, but obviously that seems to be past tense now. For WTI, the price went up 5.66% and is at $88.60. Closely related to that, we see gas, because the Strait of Hormuz is also a passageway for gas and, of course, fertilizer. But for natural gas, we see now it's up 2.28%, $2.73. The U.S. seizure of that ship came after Iran attacked a tanker in the Strait of Hormuz on Saturday, and they did this on Sunday. A Revolutionary Guard gunboats fired on the tanker, and a container ship was hit by an unknown projectile. This is according to United Kingdom Maritime Operations. And Algeria had on Sunday, they've launched a fresh call for international bids for hydrocarbon concessions, seeking to boost energy investment as global markets reel from the war in the Middle East. Oil and gas prices, of course, we know have surged since U.S. and Israeli war on Iran broke out, with the closure of the Strait of Hormuz and damage of Gulf energy infrastructure. That's disrupting supplies. 7 blocks up for grabs. That's what Algeria is saying. And the Algeria Bid 2026 tender covers 7 areas, including strategic basins in the south and southeast. 6 blocks are offered under production sharing agreement with state firm Sonatrach, while the 7th is a participation contract where Sonatrach will hold at least 51%. Bids are due by November 26, with results expected by the end of January 2027. Away from oil and gas now, gold prices inched lower on Monday as the dollar firmed, while news that the Strait of Hormuz is closed again has pushed oil prices higher and revved inflation fears. Well, the dollar index threatened, making greenback priced bullion more expensive for other currency holders. So spot gold lost 1.3% to settle at $4,815.90. Spot silver almost 3% in the red, $79.59. Platinum 2.41% in the red, just about $2,000. Palladium almost 3% cut off its price at $1,553, and copper 1.41% down, joining the rest of the metals at this point at about $6. And moving away from metals now, more of what's going on the continent. It's celebration for Uganda, their export earnings for the year ending February 2026. That grew by 63%, largely because of gold and coffee. And the performance of the economy report for March 2026 is issued by the Ministry of Finance, Planning and Economic Development. And it's revealed that export earnings grew to $1.37 billion in February compared to $839.28 million same time the previous year. Well, this growth, they say, is mainly on account of significant increase in gold and coffee export receipts over the period. Gold export earnings more than doubled increasing from $318.71 million to $818.16 million over the same period. Ethiopia's entry into trading under the Continental Agreement, that's AfCFTA, marks a major milestone in unlocking access to Africa's single market of 1.4 billion people. This is according to Secretary General of the African Continental Free Trade Area, Mr. Wamkele Mene. Addressing the forum, he says that Ethiopia's ongoing reforms and entry into the trading under AfCFTA marks a historic step that positions the country to tap into the continental market of about 1.4 billion people and a combined GDP of about 3.4 trillion US dollars. He notes that intra-African trade reached about $220 billion in 2024, driven by manufacturing and services, and emphasized that the AfCFTA provides a stable, rules-based framework for investment and trade at a time of global economic uncertainty. Mr. Mene also commends Ethiopia's reforms in improving their business climate, including strengthening financial systems, customs and investment frameworks, as well as expanding digital payment platforms to integrate small businesses and farmers into the economy. The African Bank of Oman, ABO, they've officially established Shalonda, marking a major step in strengthening financial investment ties between the Middle East and Africa. The new institution, which is in Angola, backed by Oman's sovereign investment framework, is designed to expand the Sultanate's financial footprint across emerging African markets, while positioning Angola as a strategic gateway for cross-border trade and investment. According to officials, the launch aligns with Oman's long-term economic diversification agenda under Vision 2040 and reflects a broader push to deepen economic diplomacy with high-growth regions. Now let's head to the market at this time, beginning, of course, from Nigeria. I mean, the explosion last week was a big one. Let's see that movement now. No, we have the slides that tells us about what happened last week. We saw a very positive performance for the week, April 13 to 17. The NGX we see rose 6.57%. Opened the week at about 211,000, but closed at 217,000. That's a huge move. We saw the 6.57% increase. The market capitalization increased 6.60 to 139. We hit 130 trillion last week, and then we went up to 139. That's almost 140. Who knows what the number will be at the close of trade today. Investor wealth added 8.66 trillion naira. So yes, investors brought in about 8.7 trillion naira to the market in 5 trading days last week. Total value traded 313 billion. Total gain, that's 8.66 trillion naira. That is what happened in the market, Nigeria's local bourse last week. There you have it. The all share up 6.57, started at about 211, at close at 217. The market cap went up 6.6% to 139.8, really close to 140. And I had it still on fire as at intraday. Investor wealth added about 8.66. This is what investors brought into the Nigerian market at the close of trade on Friday, almost 9 trillion naira. I wonder where this money has come from. Then total volume traded was about 3.588 billion shares, and the total value added 195.313 billion naira. And of course, this is what the market gained overall at the end of trade. Now, let's take a closer look at some of them. And of course, we know that the banks And then, of course, we had a Seplat last week. Oh God, they were on fire. They hit the 10,000. Some of those stocks, I'm sure if you watch Business Morning, Laddie did give us some of those stocks that are above $1 and the ones that hit 10,000 naira at the end of it. So, but high point of trading last week, we saw on Friday was the strongest of the week. Friday alone, almost 2.5% is what the all share went up by. Banking index, the figures, yes, 11.85, followed closely by oil and gas that surged 17.59 for the week. Now, nothing grows all the time. I mean, no market is perpetually all going up. So there are some risks that we might face this week. I wonder if those risks are real or not. But NGX risk factors going forward. With so much money made, investors are likely to take profits. So there's the risk of profit taking from this week. I don't know if that has started. Inflation concerns, as we know, is a reality globally with what's going on in the Middle East. FX volatility is coming back into conversations, unfortunately, and then global oil price movement. These are the risks that the market might see or traders may be considering this week. Let's find out which of them really we should be afraid of or not. And we have Adidotun joining us now to tell us observations so far and perhaps how risky these things are. Hi, Adidotun. Good afternoon. Welcome to the program.
Good afternoon, Ini. It's good to be here again.
Great. So I know you had an exciting time last week seeing this very huge explosion in positive movements in the market. I'm sure that excites you also.
Of course, it's time to be excited. It's very good to be excited, seeing a lot of capital come into the equity space. Interesting times indeed.
And we saw that the major stocks, the figures, the oil and gas, can we expect that to continue this week?
We would expect profit taking to happen at some point. What we're seeing currently is, of course, we're not seeing so much surge on the oil and gas yet. And of course, the performance of the oil and gas is directly related to what's happening between US, Iran, Israel war, and which has driven oil prices northward. But today we've been seeing more interest, in banking names. We've seen a little bit of interest also in industrial goods and a few others. So the market is still very, very much positive.
Yeah, so a lot of people think that that's investors positioning for earnings.
Yes, we are expecting earnings. Results should be announced for Q1 anytime this week till next week. So we expect that blue chip companies, a lot of companies, will be able to sustain performance, which to sustain these price levels.
So what do you say to these risks? To profit taking, you've already mentioned that, inflation concerns, FX volatility, global oil. What do you say to the possibility of these, stealing some of those gains that we had last week?
The thing there is that there is still a little bit of headroom, even in the equity space, because right now, looking at the metrics, the macro metrics, and looking at the numbers companies have posted in 2025 and what they are likely to post in 2026, we believe there is still going to be a lot of headroom. And also, the biggest driver might also be associated with, the big one coming, much later in the year in terms of listing of the mega refinery and possibly NNPC.
Is there any incentive for an investor to get on the market at this time, looking at the level we've gotten to?
Of course, there are always opportunities depending on what side of the coin you're looking at. Looking at a few names, there are a lot of headrooms. If you pay attention to the numbers, you see that the numbers don't lie. And by the time we see Q1, it's going to be very, very decent, and they should follow suit as well.
Can we expect the bubble to burst after the earnings?
Of course, we will expect that there will be correction in some names. Bubble, I'm not going to put it more like bubble, because whether we like it or not, this is not more like 2009. I keep telling people, right? The balance sheets are bigger, companies are bigger, the framework is better. they can hold their own this time around relative to what happened some 16 years ago.
And talking about framework, this new trading time from 9 a.m. to 4 p.m. starting from next week, how do you expect that to affect activities at the market?
It's still not so clear how it will because what I would have researched from a personal perspective is at some point, there will be a lull, like, people, get a little bit lazy. It's imagine the trading time is almost doubled from like a 4 hour 30 minutes period, to 7 hours. That's a long time, right? Will the market be able to sustain tempo across those hours? I don't know, but of course, one thing you'd expect is that the behavior of every market participant is going to change given the extension.
And I believe for equity traders like yourself and others, it's more work, more working hours.
Unfortunately, this is my career, and that's what I find myself
But do you see this
here.
giving a window to, because the NGX believes this will give opportunity to, markets like, or investors like in the United States who would wake up and meet the market still open. Do you think that will attract more foreign investors?
Yeah, of course. I think is that because foreign investors are here, whether I would like it or not, right? It's not as if they disappeared. The attitude and the behavior is going to change. So you would imagine currently, U.S. clients who would leave mandates overnight or who would want to get in early to be able to, give mandates. Perhaps they might want to attempt a different approach. But either which way, on the institutional side of things, it all starts from a research being done, opportunity being spotted, and they take advantage of it. You understand? So maybe not. Timing may matter, but the thing there is that Nigeria is looking very very exciting right now, and of course, it's a destination to be.
Yeah, it's a destination to be, and you are here. So thank you so much, Abiodun Adedotu, equity trader at First Securities Brokers.
You're welcome.
Let's see what's happening in other markets on the continent, especially for other markets on the continent. We have, apart from NGX, it's still positive. 218, we hit this in early trade and we're sustaining that. For Johannesburg is, however, profit taking 1.30 in the red, 119,000 level, that's where it is. EGX is also red, almost 1.5% down, 51,617.60. For Nairobi, close was positive on Friday, 0.28%. And from there, we move to the Middle East and see negative sentiment seems to be what we have there from Dubai, which is 1.61% down, to Abu Dhabi, 0.5% down. I will see the other markets in the Middle East at this time. Tadawul and Qatar also red at this time. I guess sentiment is spreading over from the US and all of that. In the United States, expectedly, the uncertainty is back with all that's happening at the Strait of Hormuz. So we see the Dow Jones, the S&P, the Nasdaq, they are down 0.55, 0.49, and 0.49, all following what's happening between Iran and the United States. And in Asia, markets were mostly higher on Monday. So a rare case of a reverse of what's going on in the United States, because we know this market feeds off what's going on in the US. From the Nikkei is looking really good right there. The seizure of that blockade seems not to be affecting what's going on with investors there. We see it's almost 10% up. That's something to look out for. Kospi and Hang Seng also in the green. Let's see the other markets in Asia at this time and see what's happening right there. There, Shanghai and Nifty. Well, this is a pleasant market. The close of trade, they have closed. But let's see if this positive sentiment is rubbing off on investors in Europe. We have Chiponda Chimbelu joining us. Hi, Chip. Good afternoon. Welcome to the program. What are investors doing? Chip, I can't hear you. I think you might need to unmute.
Okay, let's try. Let's
Great.
see.
I hear
That
you.
should
I
be
hear
fine.
you. Yeah, yeah.
Now you hear me.
Yeah, go ahead now.
Well, Ini, I was just saying that the positive sentiment in parts of Asia is not rubbing off here in Europe. European shares are actually trading significantly lower today, and the stock 600 is actually down 1%, and Germany's DAX is faring even worse. It's like 1.3% lower because, of course, hopes for peace, for a resolution to the Iran war have faded for now after the U.S. seized an Iranian cargo ship that tried to run its blockade. And of course, we do know that Tehran has vowed to retaliate. So it doesn't look like there's going to be, ships going through the Strait of Hormuz anytime soon. And oil prices have surged as a result. That is what is weighing on Europe's energy dependent economies and keeping investors here also cautious. Now, Germany's Chancellor Friedrich Merz announced that the country's National Security Council will be addressing the issue of energy supply security. And in Brussels, the European Union is actually reportedly working on a list of recommendations to improve energy efficiency in the bloc. So obviously, energy is a big theme here because, of course, it is also affecting markets.
Yeah, obviously, always a big theme talking about energy. But in spite of all of this, we heard Germany is hosting the world's largest industrial trade fair amidst all of this.
Yes, it is. It is. It's doing that in Hanover.
Yeah, so I mean, what are the key focus? I believe, I mean, the war is going to be a part of the conversation, the impact, the energy you just talked about.
Yes, of course, it's the backdrop of all of what is taking place at that industrial fair in Hanover. And during the opening ceremony, Germany's Chancellor Friedrich Merz and Brazilian President Lula da Silva actually called for closer relations between the South American country and the European Union. And that's because next month on May 1st, the EU-Mercosur Free Trade Agreement takes effect. Now, that deal, which was only signed earlier this year after more than 25 years of negotiations, creates a free trade zone between the European Union and 4 South American countries: Brazil, Argentina, Paraguay, and Uruguay. And so many see the EU-Mercosur FTA as a sign that the old global trading order is gone and the realignment is pushing countries into each other's arms. And of course, Brazil, as Latin America's most populous country, it's a big part of that effort for the European Union. And it is also the partner country of this year's Hanover Trade Fair. Brazil is, of course, important economically and geopolitically. It is Germany's most important trading partner in Latin America. And Germany is Brazil's most important trading partner here in the European Union.
Yeah, talking about equal partnership. But what exactly do they bring to the table now?
Well, Brazil has a population of 216 million people, and that is, of course, a huge market for European companies, especially given that Brazil has been pushing a long-term industrial policy which focuses on sustainability, decarbonization, and energy transition. And Brazil also holds substantial amounts of rare earths, and Europe could import more from there because, of course, Chinese export restrictions on rare earths have made it very clear to European countries that they need to be diversifying their supply. Now, geopolitically, Brazil cannot be ignored. The South American nation is a member of the BRICS group of countries, and Brazilian President Lula da Silva is a leading voice of the global South. He does have good relations with the Chinese President Xi Jinping, and he visited Russia's President Vladimir Putin last year. It is, of course, important for Europe to have good relations with countries whose leaders engage with some of its rivals and adversaries because they can, of course, help it apply pressure on those countries when it comes to diplomatic negotiations. Now, Brazil, of course, does have clout both in its region and also, of course, on the global stage.
Yeah, sounds very strategic there for Europe. Thank you so much, Chip. And of course, I will follow up on the trade fair.
Thanks, Ini.
And now let's head to the crypto space. Over the weekend, there was a hack that saw almost $300 million drained from a little encrypted project, and that has triggered a crisis of confidence among decentralized finance investors, with users pulling billions of dollars from DeFi's biggest lending platform. The hackers deposited about $200 million of the tokens that they stole on Aave as collateral for borrowing another cryptocurrency. And this news, according to cybersecurity, and it's been moving and shaking a lot of decisions in the crypto space since the weekend. The look at collateral and trust comes back again to the conversation on the crypto ecosystem. And still on that, just before we go to the prizes, Binance, they've launched Binance AI Pro. It's a new semi-automated AI trading assistant that's built directly into platforms, and it goes considerably further than a chat box. And Binance AI Pro gives users access to an AI-powered trading assistant that's capable of analyzing markets, executive trading strategies, managing positions through a dedicated virtual sub-account. So AI on another level. This is what we are seeing here. The product is currently in beta and capacity limited, with slots being released in batches for users who want to get ahead of the technology curve. And Michael Saylor, he's in the news. Strategy co-founder is signaling another massive Bitcoin acquisition coming on the heels of a $1 billion purchase finalized earlier this month. According to him, in his post on X, Saylor shared a chart of the company's historical buying patterns alongside the caption, "Think even bigger." Well, the latest post follows a regulatory filing last week, Monday, where Strategy disclosed that it had picked up 13,927 Bitcoin between April 6 and 12 and cost the company about $1 billion. So there you have it. Those are the stories making the headline. Of course, we do expect Michael Saylor's announcement to affect investor sentiments one way or the other. But in spite of that, I think we saw that Bitcoin is red at this time. The jitteriness and the uncertainty is back in that space. So you see Bitcoin has lost 0.32% in about 24 hours, 75,363.93. Ethereum is down also, but at least it has gone beyond 2,000 now. Remember when it was struggling with just about 2,000, it's 2,316.72, lost about 0.5% there. So we see more reds this morning. Expectedly, that's what is happening. The uncertainty is back at the Strait of Hormuz, and that's spreading to almost all the markets except the Nigerian market. So you want to invest in the Nigerian market. But that's it on Business Incorporated today. Thank you so much for being a part of the program. It's a new week, so we still have 4 more episodes to go, and you don't want to miss any episode of it. I'm Ini John McQuarrie. I'll see you tonight. Let's see where the market closes. Bye-bye.